cement sector rather is up 22% in 2012, lagging the broader NSE All Share Index, which is of course up about 32%, and despite moves to address Nigeria's huge infrastructure deficit in 2012. To break down the factors that have limited the growth of the sector in 2012 and what to expect in 2013, we have Chibuzo Invenso, Head of Research at ARM Investment Managers, on the line to give us some perspective. Chibuzo, it's great to have you on the show today, and I think the first place to start for me will be your thoughts on the demand-supply dynamics in Nigeria right now. I recall speaking to some producers in the past, and they continue to tell me that it's tough to even gauge the demand because what happens is that whatever you produce gets sold. Do you think the dynamics are still in this much in the favor of producers right now?
Thanks, Wale, for having me. Absolutely, yes. There's no question in my mind that demand-supply dynamics favor the producers. What we've had is really a significant amount of suppressed demand because obviously Nigeria is growing and so much in terms of an infrastructure and a housing gap. And there's obviously quite a bit of cement demand that doesn't really show forth because prices are much higher in Nigeria than on average, even compared to some of the West African regional countries in the West African region. Nigerian cement is about 60% higher than many, other West African countries. And obviously, the housing and the infrastructure gap is much higher due to the population. It may also interest you to know that the capital consumption of cement in Nigeria is also much lower than many sub-Saharan African countries, never mind more developed economies. So clearly, there's significant demand or significant supply shortfall, much more demand than supply.
What do you make of the recent news around Dangote Cement shutting down some production facility in Boko? That gives us a sense that for strategic reasons, they feel there's a need to stop producing in that region. Of course, some of the headlines we've heard is that this is linked to cheap imports coming out of southern Nigeria.
Well, for me, there's really only one question. There's only one test to see if there's in fact a supply glut, and that's prices. Right. And if prices haven't fallen since the beginning of the year, then there simply isn't a glut, end of story. So I think for Dangote, it's probably something to do with their internal dynamics, managing their own production. And obviously, they shut down Boko because the other plants are much more efficient and they get better efficiency and therefore more margins operating the other plants. I think the real idea really is Dangote makes 50% net margins for a commodity. It's insane for a company that makes commodities to make 50% net margins. And therefore, I think the argument that there's some kind of, they're facing some kind of supply glut and, they can't push their products out to the market is probably a bit, should I say self-serving, if in fact, the company is responsible for that. But I simply don't believe that there's any kind of, the prices don't tell me that. And,
all right, okay. So a very interesting point you make about the margins, fantastic margins, like you said, about 50%. But then we're not seeing that translate to significant movement in the share price. Dangote Cement's share price this year is up only about 22%. Of course, we know some of its rivals, Lafarge, WAPCO, Ashaka, have done much better. Your thoughts going into next year, though, do you think we would see the cement sector outperform the broader market?
Yeah, well, I guess it's funny you sort of say 22%, you call it only. I mean, we wouldn't be having this kind of conversation last year.
But the market is up well over 32, so
yeah,
we have to put it in context.
Sure, I take your point. But, the fact is that, I've talked about in the past, the dynamics driving the market really tends to favor some of the other sectors, some of the more sectors that seem to be more defensive. I guess you can exclude the banking there because, obviously, they had the problems last year and there's this big recovery.
Right.
Now, for Dangote and for the cement sector, it's not been as visible for the foreign investors that are much more interested in Nigeria. Across the emerging markets, it's really about consumers, it's really about even financials have benefited because they tie more into investor sentiment, which isn't to say that the cement sector doesn't have the kind of growth or doesn't have the kind of features that also benefit from a growth story like Nigeria. As a matter of fact, we've always argued that it does. It's so, one has to delineate between what investors think and what is actually going on in the company.
Okay, but very quickly, yes or no? Do you think it's going to outperform the broader market next year?
Well, I think it's going to. I mean, there's every possibility that it's going to do that. Why? Because the factors that drove the market this year will probably be different, and we'll see much more valuations and more fundamental factors coming in, as opposed to this year where many of the drivers were more technical.